Good morning. Welcome to Trading Hour. It's the second day of green on the screen right now. So it looks like the Santa rally has just about arrived. As we speak, it's about 80 points higher on the Nifty. The day's high today was 83,867, which is just above the 200-day moving average. As we speak, we're slightly below the 200-day moving average of 23,841. We're touching that level, but now we need to conclusively and comprehensively cross that level for the bulls to get some more confidence and momentum. But for now, it's up close to about a third of a percentage point. Metals and banks on the back foot, on the way up. The entire Tata Group stocks are active. So Tata Motors is your top gainer, but even the TCS is higher. And some of the, led by Tata Motors and M&M, even the auto index, the Nifty auto index is showing you green on the screen. And defense is a big mover on the back of notes coming through from Elara and Nuvama.
Absolutely right. And one more, Phillip Capital too. So today is a day where a lot of sell-side analysts have put the focus on the entire defense space, and that's keeping those stocks quite active in the session. But like you mentioned, when you talk about the broader end of the markets too, the advanced decline is quite positive there. When you're talking about the mid-cap and small-cap index, gaining in tandem largely with the benchmark indices. You spoke about some of the Tata Group stocks. This on the back of the fact that Money Control has reported that there could be another IPO from the group in the offing. Some of the names that are doing quite well from the Tata pack is Tata Chemicals, Tata Motors, like you mentioned, Tata Consumer. Look at Tata Investment Corp. That particular stock is at the upper circuit, and even a Voltas, for that matter, today is gaining. The other stock on the radar is Amber Enterprises. If you pull up a 3-day or 5-day chart for that particular name, remember, stock yesterday ended higher by almost 12%. Today, it's cooled off a little bit, was higher by almost 6-7%, but it's cooled off from the day's highest point. Some more details on that particular name later. And like you mentioned, the defense companies in focus today as well. But largely, overall, a positive start. Advanced decline largely in favor of the advances today.
And there's one stock which is on fire, and not just today, for the last couple of years now. We're talking about PG Electroplast. Now, PG Electroplast recently had raised money via QIP, and this month itself, it's up 30%. This year, we've seen a gain of close to about 300%, and this follows some big rallies on PG Electroplast. Hormus has told me 2024, 300 plus rally, 2023, 110%, 2024, 40% higher, and 2021, 472% higher. But for the latest news on that, the tie-up with Whirlpool, we've got Upasna joining in. Upasna.
Well, PG Electroplast and Whirlpool have signed a definitive agreement for contract manufacturing of selected models of Whirlpool-branded semi-automatic washing machines. Now, under this agreement, PG Electroplast will manufacture some of the SKUs for Whirlpool at its factory in Roorkee. And PG Electroplast, mind you, is already an existing supplier of Whirlpool-branded air conditioners. And both these companies have indicated that they will continue to evaluate the potential expansion opportunities going forward. Hence, this stock remains in focus today on back of this.
Well, thank you so much for that, Upasna. Both the stocks, PG Electroplast as well as Whirlpool, doing quite well in the session today. Well, one particular stock that I'm tracking is actually Edge Infra. That particular stock too has seen some green in today's trading session. Now, what's actually happened over that is that the company yesterday to the exchanges has informed that one of its subsidiaries has entered into a battery energy storage purchase agreement with NTPC Vidyut Vyapar Nigam Limited. Remember, a lot of road companies, a lot of infra companies are diversifying, and Edge Infra too is making a play for the same. Along with that, a couple of days ago, remember, the company went ahead and acquired close to 28.4 lakh shares in another subsidiary, which is Edge Jaipur Solar Project. Now, this particular acquisition was done at via the rights issue at 10 rupees a share. Now, remember, just to give some context, Edge Infra had guided to a total order inflow of close to 12,000 crore as far as FY25 was concerned, and this was against just an order inflow of close to 4,500 crore. The total order book at the end of Q2 stood at over 16,600 crore, and remember, at the end of FY24, the order book just stood at around 8,480 crore. On the back of that, Edge Infra today doing quite well.
Indeed, and let's get to the other big story, which Money Control has picked up from its sources, that Tata Capital, the flagship financial services arm, the NBFC arm of Tata Group, has initiated work on a big bang listing. The last IPO from the conglomerate was Tata Technology, which had a bumper debut last year, November of 2023. Now, Ashwin is joining us on the phone line. He's picked this up from his sources, and he's here with the details. Ashwin.
Good morning, Rima and Vivek. Yes, this is a story that broke last evening on Money Control after Tata Technologies the House of Tatas is now preparing for the next big IPO from Bombay House, and that's coming in from their flagship financial services arm, Tata Capital. Now, of course, the clock is ticking for the Tata Group because this IPO is being done to comply with the RBI's mandatory listing norms for upper layer NBFCs. Tata Capital falls in that list, and the deadline for that is September 2025. What I'm picking up from my sources is that Tata Capital has initiated work on a big bang IPO of Tata Capital. And what we're given to understand is that the size of the IPO is likely to be in excess of 15,000 crore rupees, maybe a combination of both primary and secondary issue of shares. Early advisors have been roped in, Investment Bank Kotak Mahindra Capital and law firm Cyril Amarchand Mangaldas. Those are the details that we're picking up at this point in time. Our queries to Tata Sons and Tata Capital have remained unanswered as of now. But keep in mind that this is an important IPO that is coming in from the diversified conglomerate. Tata Capital, of course, is a subsidiary of Tata Sons. Tata Sons directly owns around 92.83% of Tata Capital. There are a few other Tata Group companies that hold a stake in Tata Capital as well. If you talk about the size of Tata Capital, it had an AUM of around 1,58,000 crores as on March 31st. Also keep in mind that the merger of Tata Motors Finance with Tata Capital had also been approved earlier in June. So therefore, consequently, Tata Motors will also have around 4.7% stake in the ultimately merged entity. So an IPO and a deal of big consequence for the group, all eyes on how they fast track it to meet the September 2025 deadline. Back to you guys.
Thank you so much for that, Ashwin. All of the Tata Group stocks on the back of that particular development that you've reported are doing very well in the session. Well, moving on, now let's introduce Growth Code, a special initiative by Grow and CNBC-TV18 with the aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right event on November 9th to share their valuable insights and strategies. Here's a snippet of Arjun Tandon, partner at Tata Capital Advisors, sharing his thoughts on the risk of trading with small capital. Let's listen.
Let us say anybody who wants to do option selling. तो ऑप्शन सेलिंग में लगभग 1-1.5 लाख लगता है पर लॉट. अब अगर आपको इन सारी चीज़ों का बेनिफिट उठाना है, आप चाहते हो कि मैं थोड़ा डिफरेंट इंडाइसिस में काम कर लूँ, थोड़ा पोजीशन साइज एक्स्ट्रा रख लूँ, तो मुझे लगता है 10 लाख 15 लाख इंडेक्स के लिए आपको चाहिए ऑप्शन सेलिंग. उससे कम में आप जाओगे तो इट इज़ डिफ़िकल्ट टू सस्टेन. सी इम्पॉसिबल कुछ नहीं है, हर चीज़ प्रोबेबिलिटीज़ की गेम होती है. प्रोबेबिलिटीज़ आपके अगेंस्ट होती जाएंगी जितनी छोटी कैपिटल के साथ आप मार्केट में आ रहे हो. अगर आप सेम ऑप्शन सेलिंग स्टॉक्स में करना चाहते हो तो नेचुरली आपको डिफरेंट स्टॉक्स में पोजीशंस बनानी पड़ेंगी. कल को किसी भी स्टॉक में कुछ भी न्यूज़ आ जाती है तो वो आपके अगेंस्ट जाएगा. तो स्टॉक्स में अगर आपको पोजीशन बनानी है तो आई फील 20 लाख के आसपास आपको चाहिए सो दैट आप एक डिफरेंट नंबर ऑफ स्क्रिप्ट्स में आप ट्रेडिंग कर पाओ.
Welcome back to Trading Hour. Well, let's now shift our focus to the commodity space. Manisha joins in, and today, Manisha is focusing on metals.
Thank you for that. Yes, I am. If you look at 2024, Vivek, and you turn back, you will see that the best of the performance within the metal sector has come in from zinc, where we have seen 13.5% of gains. And even as Dr. Copper is called Dr. Copper, we haven't seen that kind of a performance come in from this one. And that perhaps tells you a story. Also, when you look at the aluminum prices, and even as there have been various pardon me, supply concerns coming in for aluminum. When you look at alumina and bauxite, we haven't seen prices gain up as much. So clearly, there was a huge amount of short covering and fresh longs that we saw happen in for zinc. Well, the markets also have seen concerns come in from China, and that is a theme that we seem to be carrying forward into 2025 as well. There is still weakness in Chinese demand, especially when it comes from property as a sector. The lack of big bang stimulus measures, fiscal spending is something that the market still watch out for. And to add to that, there are now concerns about tariffs from US coming into China as well. And China already has started to curb. We've seen that tax rebate already being announced from China. So that is going to be one theme to keep an eye on. The second is going to be about the currency moves. We have seen Chinese yuan continue to be depreciated. The US dollar index is trading at a 2-year highs. So where the currencies move forward is going to be yet another thing to see. The third thing is going to be about energy transition, and most of us believe that 2024 perhaps could define that, and energy transition would see a lot of demand coming in from metal. That clearly was not seen yet again, but that seems to be shifting as a theme into 2025. The fourth is going to be about on how would you see decarbonization, investments into newer mines, what kind of JVs would we see in metals, and that would define on how the metal prices would be in 2025. In the meanwhile, well, copper is something that everybody would keep an eye on. Currently, we are trading at around $9,100 a ton, and the most bearish of a forecast comes in from Bank of America at around $9,400. But all the other banks, including UBS, Goldman Sachs, Citi, and JP Morgan, believe that 10,000 and plus kind of levels is what you could see in 2025. Now comes zinc, and here the street is totally divided. We have some banks like SMM and Trading Economics anticipating that you could be looking at 2,000 to 2,600 in sense of Fitch ratings as well. And then you have a report from Citi suggesting that 3,100 could be a level that you could see for zinc. Zinc actually is the best performer within metals coming in from Citi there. So as you can see, a very big divide, and anywhere between 2,000 to 3,000 is where the street anticipates the zinc prices in 2025.
Thank you very much for giving us these updates. The rupee continues to inch lower at new record levels, 85.18. We opened at 85.13. And now it's lost, 5 paise more. Get into a break. On the other side, we'll invite Mitesh Thakkar and get in a few top trading bets. Stay tuned. Welcome back. Biocon is in focus after a couple of generic drug approvals. Vinny is here with the details. Vinny.
Good morning. So yes, Biocon is in focus after the company and its European partner Zentiva have actually received a procedural approval that's called decentralized procedure approval for a complex formulation, which is liraglutide. Now, this is for the European Union region. Now, what does it do is because they have received this approval, they don't need more market authorizations for other countries in the European Union region. So that would be saving them some cost in terms of applying for new approvals. Other than that, this is a generic version of a Victoza, which is a treatment drug which is used for type 2 diabetes. So on the back of this, this drug is also used for GLP-1 opportunity, which is a weight management opportunity and treating weight management. So that is a key factor to watch out for. Now, do not forget the management has already spoken about this opportunity in its Q2 con call. They were expecting this approval coming in, and they have already applied for a review with the US FDA for this similar drug as well. So keep an eye on this one. Analysts are saying that currently for this Victoza drug brand, the sales were around $1 billion in the last year in terms of global sales that we saw coming in, and especially in the rest of the world. In that rest of the world region, European Union would be accounting to around 200 to 300 million sales. So a good opportunity that comes in for Biocon, an important drug that they will be focusing on, and the opportunities will start shaping up in H2 FY25 as well as FY26 for the company.
Thank you so much for that, Vinny. Biocon now trading near the day's highest point. Well, moving on, positive brokerage views continue to come in as far as the defense sector is concerned. Upasna is here to tell us more.
Well, defense sector remains in focus today as a lot of brokerage notes are saying that the defense sector is on a positive outrun. Now, Elara says that it is expecting a ordering flow to rise sharply in Q4 FY25, given that the defense capex is set to be met in FY25. Now, allocation to domestic companies stands at 75% of the total budgeted defense capex, and it also says that the engine woes for HAL may end as soon as General Electric will supply F404 engines in March, and inflows for HAL will jump by 1.2 trillion in FY26. Now, they have highlighted the top picks for the sector. HAL, they have given a buy rating with a target price of 5,465 per share. They've given a buy rating for BEL with a target price of 345 per share. Bharat Dynamics, they've given an accumulate rating with a target price of 1300 per share. And Garden Reach, they've given an accumulate rating with a target price of 1660 per share. Now, Nuvama says that it is optimistic on India defense space. It says that the huge localization push to reduce dependence on disrupted global supply chain and even continued modernization efforts with large program coming ahead of expected lines. Hence, their top picks for the sector is BHEL and Data Patterns. Now, Phillip Capital also has a positive outlook. It says that the defense sector stands out as a compelling investment theme, offering multiple growth levers and strong visibility for the long-term execution. Overall, they maintain a positive outlook on the sector, favoring the stocks with favorable risk-reward profile, such as BEL. They have a buy rating with a target price of 390 per share. HAL, buy rating with a target price of 5,500 per share. And lastly, Data Patterns, buy rating on this stock with a target price of 3,400 per share.
Thank you very much for that. Defense stocks are on fire. Mitesh is now with us for a quick technical check on the markets. Mitesh, still very, very quiet. Anything that you've gleaned by way of a trend and any defense stocks that you like?
Pretty quiet actually, because post the bounce back, we haven't seen any kind of follow through. But I still believe that this is all a process of, compression, and we're not looking at some kind of expansion happening in either direction. So, as I said earlier, I think 23,850 broadly on the upside and 23,600, 550 on the downside is the range. So we're still within that range, not much happening on the index. The Bank Nifty between the two indices is slightly on the weaker side. But if it can clear 51,400, then I think the Bank Nifty should be able to gain some strength, and that in turn might help the Nifty to go up further higher. But as of now, I think I'm waiting for that 51,400 to be clear.
Mitesh, what are your individual picks for the day? Anything that you're liking?
So Jubilant Food is on the buying side. Buy list. It's buy with a stop at 689 for targets of 725. And I'm waiting for some kind of a breakdown on the chart of Kalyan Jewellers. If it breaks 715, 714, take a short version with a stop at about 730 and look for a target of around 690.
Okay, thank you very much for that. We will slip into a very short break. On the other side, we'll discuss market fundamentals. Anirudh Garg from Inva Asset PMS joins in next.
Welcome back to Trading Hour. Well, on Friday, you did see one particular stock take it on the chin, and that was Siemens. Post the analyst call, and while the analyst call was on, the stocks saw a very deep knock on the back of some moderating commentary from the management, especially in terms of capex. Yesterday, the stock was largely flat, but today, the sell-off has resumed. The stock was down almost 3%. Remember, whole host of brokerages cut both their EPS estimates as well as the target valuation multiples for Siemens today, down another 2.5 to 3%. Well, but moving on, 2024 has been about putting more than just convenience store at your fingertips and about delivery within 10 minutes. It's been about the meteoric rise of quick commerce with apps like Blinkit, Zepto and Instamart stealing the limelight, and entrepreneurs and investors wanting a piece of the action. On our ongoing series, Rewind 2024, CNBC-TV18's Shilpa Ranipeta reports that while 2024 was the year of the quick commerce boom, 2025 will be the year of the survivor.
First, they said no one wants delivery in 10 minutes. Then a few players offered it anyway and spoiled the Indian consumer. As the year progressed, everyone wanted everything in under 10 minutes. Groceries, iPhones, flowers, party hats and decorations, juicers, speakers, shoes, jewelry, even bed sheets.
Or is their expectations just keep expanding. They just keep going higher and higher. And now we're starting to look at consumers wanting things in 10 minutes, but now it's also wanting a lot more things in 10 minutes. And maybe even like wanting their food in 10 minutes. So bed sheets was 3 months back. It was the most searched like, let's say, more searched with less selection than what consumers wanted. So that's an example. Like, you would wonder why people want bed sheets in 10 minutes, but they want it.
The Indian consumer loved it. Blinkit, for instance, delivered nearly 93 million orders in the second quarter alone, and Instamart fulfilled nearly 70 million orders. And so 2024 became the year of the quick commerce boom. Zomato's Blinkit and Swiggy's Instamart have been growing in triple digits and are growing nearly 6 times faster than their food delivery businesses. The numbers did not go unnoticed by investors. While Zomato's stock has surged 137% between the 1st of January and the 17th of December, Swiggy's 11,300 crore IPO in November was subscribed 3.6 times. It listed at an 8% premium to its issue price despite a muted market, and as of mid-December is up 52% off its lows. CLSA expects it to rise an additional 32% to over 700 rupees per share. Zepto, on its part, is the highest funded startup in India, having raised $1.35 billion in 2024 alone. It is currently processing over 7 lakh orders a day. Small wonder then that a slew of existing e-commerce players are jumping onto the bandwagon. Flipkart has launched Minutes, Myntra has launched M-Now, Amazon is testing Tez, and Big Basket also pivoted to quick commerce.
Last year was about 100% for the category itself. This year, I think quick commerce will grow by 50 to 70%. And over the next 2 to 3 years, I don't see this pace of growth slowing down.
Right.
It should continue to grow at about 30, 40, 50% CAGR over the next 3 years. All quick commerce players are experimenting and trying to figure out what are the other products that you can add on. So a lot of experiments are going on.
Experts say that given a massive total addressable market, the increased competition will not be a problem, provided companies can execute at scale.
I think it's a good thing. A lot of the innovation happens when there is more competition. I feel that there are going to be a lot of players. There are going to be players that are going to be specialists in certain areas. And I think this is a very, very large space as compared to food delivery, so it should be able to support multiple successful companies.
It may boil down to how much these companies are willing and able to do to survive. Blinkit, Instamart and Zepto, after all, are yet to turn profitable, though they are headed in that direction. But similar apps like Joker, Fridge No More, Bike have failed even in a large market like the US.
It comes in and just starts randomly, discounting, which has happened historically in the past without naming names. Then we think it's like a death knell. That's like the worst way to get market share because it's not even long term. You're not going to be able to hold on to that market share when you eventually do pull the plug.
As 2025 dawns, quick commerce companies are trying to get food and drinks delivered to consumers within 10 minutes, and that will be the next frontier. These quick commerce players are also testing features like quick returns, pay later, and EMI options to make 10-minute delivery accessible and appealing to more. So 2025 could well be the year the quick commerce model will be put to test, and the company that manages to keep costs in check and turn profitable while keeping up with the ever-changing expectations of the impatient and spoiled consumer will determine who emerges a survivor. In Mumbai, Shilpa Ranipeta.
Thank you very much for that. The impatient and spoiled consumer. That's what quick commerce has done for us. But let's see who survives, the fittest of the survival of the fittest. But get into a break, and here is some good news for all our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates, all at your fingertips. So don't wait. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store. Welcome back. Now, TeamLe is in focus because earlier this week, the company acquired stake in 2 companies, TSR, Dara Shaw, and the other one is Crystal HR, which will expand the company's services in HR tech. To talk more about it, we have with us Ramni Datti, CFO of TeamLe Services. Ramni, thank you very much for joining in. This is Rima here. We'd spoken just, recently, and you had indicated that the company is very actively closing in on acquisitions in the HR tech, and that's played out. So can you tell us these two acquisitions, what does it do in terms of revenues and in terms of EBITDA, and how much have you paid for these two acquisitions?
Hi, Rima. Good morning. So we have been saying that we are actively looking for M&A opportunities, especially in the HR tech space, because the addressable market is huge. TeamLe as a brand is very well known with corporates in terms of payroll management, employee engagement, payroll-related compliance management. And we are looking for expansion in HR tech space, which gives us additional portfolio of services and solutions, which we can cross-sell to our existing staffing clients, as well as create it as an independent P&L. So with that intent, while we have organically started our own HR tech suite, we are also looking for M&As that can roll up and expand the service portfolio. So now with TSR Darashaw, we are able to access a large enterprise base of clients, almost with 170,000 payroll records. And these are some of the largest BFSI clients that we are talking about. So the opportunity for upselling as well as bringing in more value addition from TeamLe is huge. And we also want to use this as an opening balance to acquire more clients in BFSI space as well as enterprise segment. Now coming to the second one is an interesting thing, the Crystal HR, which is a HRMS platform. There are very few HRMS platforms which are profitable in the country right now. Most of them are not making profits. The cost of acquisition is very high in this space. However, Crystal HR has managed to build this business over 20 years, focusing on mid-segment and mid-segment of enterprise clients. So they have close to 3 lakh payroll records being serviced on their platform, working with almost 400 plus corporates across the country. While they have more concentration, more in the south of India, we want to use TeamLe's brand and take it across other geographies. So now with TSR Darashaw and Crystal HR, we have a larger portfolio, both in managed payroll as well as tech-related solutions on employee management.
Understood that, Ramani. The other question that we want to ask you is in terms of valuation, how did you value these companies? We understand together you've paid a little over 40 crore for both of these acquisitions. What was the multiple that you've given? And you also mentioned about both cross-selling as well as upselling opportunity. Could you give us a number or quantify the opportunity size that you see with both of these acquisitions?
Yeah. No, for both the deals, we went with the profit multiple since TSR Darashaw is more of a service business. So there, the PBT multiple is slightly on a lower side, which is about 5.5 times. There are also some other adjustments which we have to take into consideration. Crystal HR being a product business, it's slightly above 7 times of the PBT. So this also is very competitive in terms of the other deals that have been taken place in the recent past in HR tech space. Sorry, I missed the second part of your question.
Would you be able to quantify the cross-selling, upselling opportunity?
I think it's too early to exactly quantify because right now what we are assessing is for the pressure that we are seeing in staffing PAPM, especially Crystal HR will give us additional services which we can upsell to the clients in our staffing segment, and that can help us expand PAPMs marginally. Over and above that, since these two businesses put together will contribute close to 5-6% of our profits, that will also help to take up the overall group profitability.
And just to get the numbers in, what will it add to your revenues and at the EBITDA level? And as a percentage of, say, FY24 numbers, what would it stand at? How material are these?
On revenues, they are not material, Rima, because in terms of top line, their contribution is like less than 1%. They're about 22 crore in revenue. But as I mentioned, in terms of EBITDA contribution, based on their current run rate, it would be about 5 to 6% contribution on our group EBITDA.
Now, we just want to take you to the underlying business itself. How are demand trends playing out both in general staffing as well as specialized staffing? You did mention last time that it's going to be more of a volume game for you. You're expecting steady state margins. So in Q3 especially, has there been a pickup you've witnessed?
In Q3, two sectors, barring two sectors, which is BFSI and IT services, the demand has been fairly stable, be it consumer verticals, telecom, retail, pharma, quick commerce, across all these sectors. And manufacturing is, again, one of the largest headcount addition sector for us in this quarter, as well as next quarter as well. So we are seeing steady demand. BFSI, as we called out earlier, because of the RBI restrictions, especially in the unsecured loan space, NBFCs, and staffing profiles. So there has been a kind of pressure on volume addition in BFSI space. Coming to IT, I think it would take 1 or 2 quarters for us to see an actual recovery. As of now, at least the headcount decline has been ceased. We are seeing marginal improvement in net addition in IT space. But for us to call it as a recovery, I think we are at least 1 or 2 quarters away.
So Ramni, as we look ahead to the next year, what would be the top 3 priorities for TeamLe's? You'd spoken about the acquisition, so that's played out. So that's done in 2024. So now for 2025, your top 3 priorities.
So definitely it's profit expansion. So that's our topmost priority, because over the last 3-4 years, the profits have been flattish. So our topmost priority for next year is to make sure consistent profit expansion quarter on quarter. That's the topmost. Secondly, in terms of margins, because again, be it in staffing or specialized staffing or at group level, the margins have been diluted over the last 3 years. So the primary focus will also be in terms of how can we bring in solutions which can help us expand the margin percentage as well. Lastly, again, be consistently warm on our top line growth, maintain 20-25% revenue CAGR.
Thank you so much for joining us, Ramni, and we wish you and your team a very happy 2025. Well, moving on, let's now take a short break. Up next, we'll discuss market fundamentals with Anirudh Garg from IndusInd PMS. Welcome back to Trading Hour. Well, as promised, Anirudh Garg from IndusInd PMS joins us now to discuss market fundamentals and his top sectoral picks. Thank you so much for joining us, Anirudh. Anirudh, the first thing that strikes us is the fact that you are now sitting on a 100% cash portfolio. That's about as bearish as you can get as far as the equity markets are concerned. What is the reason? What is the rationale for completely exiting, the entire equity portfolio?
A very good morning to all the viewers of CNBC-TV18. See, I think as Morgan Housel has rightly said, everybody is right in the stock market. You just have to rely on your framework, and the framework should match your psychology. What, as an investor for a very long time, I started investing in 2006. We've been a fund since 1992. What I've realized over the time that whenever a bull run comes, the bull market correction, or particularly a bear run which follows it, a lot of wealth that you've made in a bull run gets depleted. So it's okay, it's okay to take a breather from time to time. It's okay to not be investing in very expensive markets. I think that is the prime rationale, not to be invest. We are all, I believe, investors and not stock market investors alone. And the overall, I think the motive is to grow the capital. And since the markets are expensive, a lot of FOMO factor is there in the market. A lot of investors are now jumping in with expecting the returns that we have seen in the last 1 or rather 2 years. So I believe, very frankly, that CAGR would not be there, and there is a significant room for downfall from here.
Would you quantify the downside, and what would be the marker for a correction? Because for some time now, a lot of people have been calling out for a correction, but the corrections have been shallow. It's only now in the last 3 months that pretty much a 10% correction has persisted. Till then, it used to be a 5% correction and the markets would instantly bounce back. What would be, what makes you convinced this time that the correction is going to be, more deep-rooted and broad-based?
See, first of all, Rima, a very good afternoon. And the first point that I believe is the overexposure that the Indian retail investor now has in the market. I have had discussions with a lot of retail investors, particularly from our PMSs, where I see that I was talking on your sister TV show as well, where I was telling them that an investor to whom it was difficult to, convince to put in 50 lakhs back in July 2022, today has a portfolio of around 10 crores, which is around 90% of their capital into the markets. So a lot of money from new retail investors has come into the market. And apart from that, apart from these behavioral biases, the valuations are also not supportive. See, the global growth is going for a toss, especially in India. If you see, the impact of the US inflation, something is not right with the Indian economy. We are not cutting rates. We did not have an inflation problem, but we are not cutting rates as expected. We are lagging behind the US. And also, I believe that the earning depletion that is happening in the Indian economy is not right. India was particularly going through an old economy run. Old economy run by means either the interest rate sensitives go up or these capex sectors go up. This time, since there was no global growth and global inflation under control, so it was a chance of the capex, and we saw a wonderful run in railways, defense, infrastructure, and power. But the tide change after the general elections. General elections, BJP not getting a majority. We should all, we all know that India was getting a very higher rating as compared to rest of the world. Why? Because everybody believed that India is being run by one of the best business minds out there. This government had tremendous allocation to capex, and it was taken very positively. But as the tides changed after general elections and now schemes like Ladli Behna, just alone in Maharashtra, it is 46,000 crores of expected outgo. And if this happens, I believe that the derating for the Indian economy is something that can come right now. So just a little bit cautious on the markets. We going in 100% cash does not mean that the markets will, go into the correction mode. We went in September 2021 up till the Russia-Ukraine war broke out in early March 2022. So it is a part of our strategy that whenever we feel that the markets are expensive to exuberant, we go in for cash and take a breather from time to time.
Anirudh, another question that we want to ask you is, now in the ongoing correction, what is it that you're finding attractive? Or, let's say maybe a few stocks from the sectors you like go down another 5, 7, 10%. What is it, or which sectors would you like?
Okay, just to answer the previous question, I forgot the point with Rima made. If I can quantify it, in Nifty, we are seeing around 8 to 10% correction, but in the small and mid caps, I think it'll be 1.5 to 2x of that. So somewhere around, say, 13, 14 to say a 20% correction can also come in the mid and small cap space from the highs that they had achieved. And when it comes to the sectors that we are liking, of course, I believe that somewhere the capex theme that has started in India, it is a primary theme of this bull run, and I think it will continue. So somewhere when the valuations are supportive of the growth that is going to come, these themes would become attractive with time and price correction. A lot of consumer names, something like a food delivery and a confectionery delivery company is something we like. The airlines are getting this airline in India is getting a lot of market shares. So, these are the companies that we're liking. Hotel companies are something that we like a lot. So yes, going forward, consumer names are something which are gaining traction. Capital goods again would become, when it comes in the valuation game, would become very, very attractive for us. Yes, but we are not very, very bullish on, say, on the other side, we're not bullish on autos, we're not bullish on global commodities like metals and all.
And how long will this correction last, to your mind?
I think there are a lot of events, Rima, that are coming in the next couple of months. We have Mr. Trump coming in, so a lot of drama expected then, and then we have our budget. So generally, if you look at the past few years, say the past 15 years, generally, whenever there is confusion, there is an increased amount of volatility. And in that increased amount of volatility comes capitulation in the market and ultimately leads to a formation of a strong bottom. That is something we believe should happen in the next 2 to 3 months.
Okay, thank you so much for joining us, Anirudh, giving us a sense of markets. You're quite cautious as far as the entire market setup is concerned as well. Thank you so much for sharing your views with us today. Well, with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.